Hi there, I'm Jonathan Healy. Thanks for joining us. On this week's Red Business, we're talking about money. If you have it, what should you do with it? We're all a lot more cautious after the crash, so what is the expert advice?
The Red Business Podcast with CompuB. Building your business with premium Apple solutions. CompuB.com.
And first up on this podcast about money and finance, we have the managing partner with MC2 Accountants, Jim McCarthy. Jim, how are you?
Good morning, Jonathan. I'm good, thanks.
You're in Penrose Wharf, isn't that right?
That's correct, yeah.
And tell us a little bit about your background.
My background is an accountant of 30 years experience in Cork, previously with McGinnis Reardon and Quintus, and myself and Sean McSweeney founded MC2, which traditionally was McCarthy McSweeney Accountants back in 2013. And I suppose our vision was to kind of develop a team of professionals where we would eventually evolve out of McCarthy McSweeney into a brand like MC2, and we achieved that 3 years ago. And we now currently have a team of 30 staff working for us in the professional services.
So when you say professional services, it's help people mind and manage their money. Is that the best description?
Yeah, I mean, I suppose we would have been, our clients would have evolved from audit and accountancy would have been originally that, but I would have seen a niche in the market to compete with the Big Four, because most accountancy offices other than the Big Four don't provide the other services. We would have decided to go for people in areas like banking, property expertise, economists, tax specialists and stuff like that. So we built a team of professionals to mix in with the accounting staff, and we've kind of created a good blend of services that way.
The client's needs always evolve. So in other words, what somebody might have wanted in 2005 isn't necessarily what they want in 2018. What's changed?
Well, I suppose the big change from a client perspective is dealing in the recoveries. We've had the recession, where we've found the niches in the whole recovery. How do you deal with banks, loan notes, debt restructuring and getting back into the market again? And I suppose that's really where we see the clients' demands evolving. Particularly, it's very current at the moment. A lot of clients out there would have got letters this week actually to say that AIB would have bought or sold their loans to service. And that's enough to put the fear of God into you when you see that land on your doormat. It is. And I suppose this is where we can give comfort to clients, because this is actually an opportunity. Most of these clients would have been struggling with trying to do deals with the banks for the last 4 or 5 years, and it's gone on too long. And we actually see the funds as an opportunity to finally resolve it. Just to give you a quick example, I had a client ring me yesterday. He said, Jim, I'm after getting a letter to say my loan has been sold to such and such a fund, and he said, should I get onto the solicitor? Should I injunct this, or what should I do? I said, you do no such thing.
Yeah, the panic was kicking in there, clearly.
Yeah. I said, this is the best bit of news you'll have got in the last 4 or 5 years. We can now actually solve your problem.
A lot of the time when people end up in a tricky situation like that, and it's the same in everything, it could be an employment thing, it could be a financial thing, it could even be a family thing. When you're that close to it, you do need somebody on the outside looking in as opposed to the panic looking out, don't you? And that's where professionals like you and everyone at MC2 kick in.
That's it. I mean, Ireland is a small place. It's you get to know all the players. So in our industry, it's lawyers, auctioneers, accountants, and it's even these funds, because most people working in these fund companies have traditionally either worked in a bank or worked in another accountancy office. So we know these people, and these people are only in like any other business. They buy these debts at X pound and expense in the euro, and they need to sell them quite quickly to make a profit. And the first person they're going to deal with actually is the debtor, and they'll give us a chance to do that business for them.
In the way that the previous lender, the bank, wouldn't have wanted to do, because they didn't want to be seen to do it, presumably.
Didn't want to be seen to be doing it, couldn't. I think the biggest problem is they were too big, and the organisations, it was very difficult to get a decision. I mean, it's unbelievable to think that here we are in 2018, we've been in recovery now for 5 years, and AIB still have 3 billion worth of debt unresolved on their books, and that's just one bank, AIB. And we've been party to a lot of those transactions that haven't got over the line, as well as all the ones we did get over the line. And generally speaking, it's just not being able to get somebody to make a decision.
How do you deal with the emotional side of it, Jim? Because I'm guessing if you're dealing with the debt restructuring side in particular, there's a whole amount of anger, which is not exactly a productive energy in what you're trying to do. How do you deal with that?
it's like, there's all sorts of stages to anything. It's like and I suppose the anger stage is long past, in my opinion. I think people have gone through that. We were in the whole denial and anger phase of it, and I think people have accepted their position now, which makes it a lot easier to deal with clients. And we would say to people, in a lot of cases, don't get too emotionally attached to the assets that are there. Obviously, if it's family homes and stuff like that, it's different. But predominantly, we deal with business commercial assets. So we would tell the client, if it makes commercial sense and you want to keep these assets, we will find you the money at the right rates and do the right deal for you. If it doesn't make commercial sense, leave it behind, walk away, do your debt settlement agreement and move on with your life.
The other thing that you do a lot on is property. And I think that there's probably a marked reluctance out there amongst a lot of people, particularly the smaller guys who got burned, to get back into the property market again. Do you see people looking at it now and saying, right, maybe, but now is the time to get back into this and to, okay, it didn't work the first time, now, sure, it can only go well.
See, we've been in the business of getting back into property since 2013. So so as an investment asset, it's been a very attractive place to get back into over the last 4 or 5 years. And we've seen very, very good growth, and we've seen clients make a lot of money in the market, in the recovery. That's not going to go on forever. And I just think now yields have come down to such a level that I'm personally beginning to kind of question it as an investment, actually, because I think we've seen a lot of growth over the last 4 or 5 years. And as a business, we're starting to encourage clients just to be cautious around property. And
because other products are available, as the man says.
Absolutely. There's a whole suite of different things you can put into your portfolio out there. And I see a lot of, we will be encouraging clients to take a look at investment into companies, for example, whereby, maybe becoming passive shareholders in good businesses. They don't necessarily have to have property assets, as a good diversification for going forward, and pick sectors that are more defensive in terms of providing you with a passive income in your pension and retirement portfolio.
Is the landscape a lot healthier now, Jim, than it was? I mean, look, obviously it was a disaster after 2007 and for a considerable number of years, up to 13, 14. Are we in a better place now, or are we still exposed to a lot of risk?
We'll always be exposed to risk. We're definitely in a better place than we were for 5, 6, 7 years ago when the credit turned off. There was no credit, so you couldn't get a transaction done. Why we're in a good place right now is that there's so many different options for credit. I mean, we were in AIB during the week and we were discussing it with them in terms of the challenges they have now of competing with what we call the secondary lenders. So there's a whole suite, there's probably 10 secondary lenders operating out of Dublin at the moment now, providing capital at 7 or 8%. And you've kind of got AIB supplying capital at 3 or 4%, but their criteria to get it is so tough, it's hard.
8% is a bit sticky though, isn't it? That's going to hurt you.
8% is sticky, but it made sense when you were getting 10% plus yields on deals that you were buying. The problem now is that the yields have dropped to 5 or 6% in a lot of cases for the quality stuff, which now puts the secondary lenders in a place that unless you're plugging a lot of equity into those deals, you're not going to be able to complete the transaction. A
very complicated world, but one that is well managed by the likes of yourselves and your colleagues at MC2 Accountants. Is there a website, Jim, that people can find you?
Yeah, mc2accountants.ie.
mc2accountants.ie, down in Penrose Wharf. Jim McCarthy, managing partner with MC2. Thanks so much for joining us in Red Business.
Thank you, Jonathan.